What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I sold a cheap high yield dividend stock, and I'm very disappointed about the news. I'm going to do a review on them, and there's just a few things that, and I said before, of course this is not financial advice for entertainment purposes, only disclaimer in the description. If I buy a stock, I'm going to buy and hold forever type of situation. Now, I've held stocks that cut their dividend, but there's a little bit more news that really disappoints me with these guys. And maybe in the future, a year or two, I may buy them again. I took their dividends from M1 Finance and I'm reinvesting that into other dividend stocks. By the way, part 1 of the series will be resumed on Monday. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. God, I'm telling you, I'm going over the REIT series tomorrow, so make sure you hit that notification bell after you subscribe. Let's check this stock out right now. And that stock is a Canadian stock, Algonquin Power and Utilities Corp. It's sitting at $6.66. Probably a really good reason to sell it when it's $6.66. Previous close was $7.14. Its day range was $6.60 to $7.02. Year range was 641 to 1601. Market cap is 6.02 billion Canadian dollars. The average volume is 7.89 million. Now look, it was doing well against the S&P, and with the recent news, they took a huge hit. So I'm going to go over these guys as a company briefly, and I'm going to go over what they do, and I'm going to explain to my rationales as to why I sold them and put their shares into another dividend stock. So let's check out these guys as a company. So Wikipedia makes things so much easier sometimes. So Algonquin Power and Utilities Corporation is a Canadian renewable energy and regulated utility conglomerate with assets in North America. They actively invest in hydroelectric, wind, and solar power facilities and utility businesses, water, natural gas, and electricity, through its 3 operating subsidiaries: Bermuda Electric Light Company, Liberty Power, and Liberty Utilities. So let's go over these guys as a company a little bit more. So here's some information on them. Algonquin Power and Utilities Corp is a renewable energy and utility company with over $16 billion in assets across North America and internationally. For more than 30 years, Algonquin has been committed to delivering energy and water solutions and services. Their growth has led both their regulated utility and services and renewable energy business groups to different geographies and commodities, but our purpose remains unchanged: sustaining energy and water for life. Through operating businesses, we provide regulated electricity, water, and natural gas utility services to over 1 million customer connections, primarily in North America. In our growing portfolio of clean, renewable wind, solar, hydro, and thermal power generation facilities represents over 4 GW of renewable generation capacity in operation under construction. So let's go a little bit more in depth with these guys. So they strive to make a lasting positive difference for people they serve, their customers, employees, and shareholders. Through their operating business, they put in parentheses Liberty, we provide regulated water, electricity, and natural gas utility services to over 1 million customer connections, primarily in North America. In our growing portfolio of clean, renewable wind, solar, hydro, and thermal power generation facilities represents over 4 GW of renewables in operation under construction. We are supported by more than 3,400 skilled and motivated employees. Another thing, through their regulated services group, they operate a diverse portfolio of rate-regulated electric, natural gas, water, and wastewater collection utility systems and transmission operations, which collectively serve the needs of over 1 million customer connections, primarily in North America. So that is very attractive. So another thing is they have 228,000 additional anticipated connections, 13 U.S. states, 1 Canadian province, Bermuda, and Chile, and 10.5 billion of regulated utility assets. So these guys are a juggernaut. But there's a few things I'm going to go over and red flags that turned me off and had me sell them. And again, maybe I may rebuy them in the future. I don't know yet. But, I'm totally turned off by what happened recently, and I sold them. So let's go a little bit more in depth. So their strategy is sustaining energy and water for life. Their mission is to deliver clean energy and water solutions that create a better everyday lives and inspire our communities. What drives us every day to accomplish our purpose. As we work towards fulfilling our purpose, we strive to be a top quartile global utility and independent power provider known for exceptional performance in terms of safety, customer experience, employee engagement, diversity, equity, inclusion, environmental and social responsibility, and financial habits. So there's strategic pillars: growth, operational excellence, and sustainability. So there's a few things we need to go over. That's their revenue. Let's check that out. And I took a risk on these guys. And look, transparency is important when it comes to dividend stocks. Revenue's been very strong, but there's a few things that I will go over after this. Check out the revenue in millions US dollars. 2015, 805, 2016, 827, 2017, 1,521, 2018, 1,648, 2019, 1,626, 2020, 1,676, then 2021, 2,285. Now let's go into the nitty and gritty. Now here's the news, the recent news that came out. This is on Yahoo Finance. AQN intends to further support its financial foundation, funding growth through a commitment to a BBB credit rating. Okay. They're focused on reduced capital spending. So effective for the first quarter, expected to be payable in April 2023, AQN intends to lower its quarterly dividend from 18 cents to 10 cents per common share, improving financial flexibility. Okay, so, they will continue to distribute to shareholders with a sustainable dividend that is expected to grow alignment with adjusted net earnings per share. That's okay. That's not bad. You know what? I've invested in dividend stocks that have cuts, EPR properties. They got destroyed by the pandemic, and then they resumed their dividend. I held on to those guys because I was happy about them and I believe in them. AQN continues to pursue the Kentucky Power acquisition. That's going to be a big one. Okay, so in December 15th, 2022, the U.S. Federal Energy Regulatory Commission denied approval for the acquisition as filed. The parties plan to continue to seek FERC approval for the Kentucky Power acquisition. So they intend to refocus their portfolio by targeting approximately $1 billion of additional asset sales. But the biggest thing right here, which really stings and really doesn't have me happy, AQN will be suspending its dividend reinvestment plan for its common shares. Effective for the first quarter in 2023, shareholders participating in the DRIP will begin receiving cash dividends. If the company elects to reinstate the DRIP in the future, shareholders who are enrolled in the DRIP at its suspension will remain enrolled at a reinstatement and will automatically resume participation in the DRIP. That really pisses me off. Honestly, that one is the biggest thing that really was a deal breaker for me selling them. Now, I may rebuy them again in the future. I haven't decided. I really have to look at a few things. AQN expects adjusted net earnings per common share, excluding gains or loss on asset sales, of 55 cents to 61 cents for the 2023 fiscal year. So I'm going to go over their dividend history. The news was a turnoff, but I'll show you their dividend growth over time. So one thing with these guys is they have really good dividend growth. 2017 it was 11 cents to 12 cents. 2018 it was 13 cents. 2019 it was 14 cents. 2020 it was 16 cents. And you got a little dividend of 12 cents, unfortunately. And then 17 cents and then 18 cents. So they made a cut, and look at their payout ratio. It's 105%. No wonder why they, had to make some changes. Hopefully they get the Kentucky, acquisition. That's one thing. The number of dividend increases the last 5 years is 5. The dividend growth in 5 years is 9.45%. So that's a high yield dividend stock. And of course, there's always a risk in a high yield dividend stock. So it's only $6. That's one thing that I am somewhat happy about. It's a cheap dividend stock. It's less than $10, but I sold it. And you know what? All those shares I sold really went into CubeSmart on my M1 Finance dividend portfolio. So it's not a big loss. I did receive a pretty nice dividend from them. And I think I lost money and I sold it. So I don't think I have to deal with the capital gains tax. So you can correct me if I'm wrong on that. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. And again, we are almost at 12,000 subscribers, so make sure you subscribe and hit that notification bell. And all your requests, I will try to get to them, but you got to hit that notification bell if you subscribe, because you may miss certain videos. So honestly, the best way to look at it is don't have all your eggs in one basket. I love diversification with my dividend portfolio. This is still a Canadian stock that is very popular amongst many investors, and I haven't completely ruled it out, but I sold it recently, so I just want to make that clear. And tomorrow I will resume the REIT series. So if you're new to this YouTube channel, I hope you enjoy the REIT series, because I really went in depth on 10 stocks and my top 10 dividend stocks for 2023 that are real estate investment trusts. You guys take care and have a great Sunday.